Hey, happy Friday, everyone. It is nice when the stock market does us a solid, and it is a Friday. The stock market should be rallying today and really going places, going high places today. Should be a really nice day of trading, and it'll be nice to take a look at some shares today, some stocks, and see what is moving. I'm going to look at a couple of sectors that I think are interesting to look at after I look at some economic data that was released. Some economic data came out that shows that, the unemployment picture, it got better. There was more jobs created than expected, which is really positive for unemployment. That's positive for the economy. So that was good news. We'll take a look at that report. Oil prices are up. That's causing a rise in stock prices for oil companies. And I think a couple of things are going to work today. The market has opened, so we can look at which sectors are moving and see where there's potentially an opportunity to invest. So let me get started and start analyzing some companies. Let me say hello to some people. Good morning, Tomas. How are you, sir? Buenos dias. And hopefully you are having a nice Friday. And I'm not quite sure how many hours ahead Argentina is. I'm going to guess you guys are 3 or 4 hours ahead of California. And we might be getting toward midday for Argentina. But we'll see. Falls Grave, good morning, man. Good to see you on. And let me know if there's some stocks you guys want to take a look at and review. So Tomas, it's 10:30 there. So it's 4 hours ahead of where I'm at. I'm in California near Los Angeles. Very good. Now I've got my bearings straight. I can say good morning or good afternoon appropriately, or at least I'll try. Sometimes I'll get it wrong. All right. Good morning, everybody. So looks like Yogi is on. Thanks for joining. Trader Prad, good morning. How are you, sir? Codis CAD or CAD. Thanks for joining and putting your comment out there. I appreciate it. Android PC, always good to see you. You've been around for a while. I appreciate that. Philip, looks like you're on. So it looks like Zim is dropping. That is a little bit sad for me because I am a fan of Zim, and I had very good engagement with people on Reddit around Zim. We all won. So I'm sure there's a lot of people sitting on gains on Zim. So hopefully everybody makes money on that stock. But very nice for you to join. And let's get into it. So I can look at PBR. Because that's the Brazilian oil company. I did not look at that yesterday. We talked about oil companies yesterday. We've been talking about oil companies for a month. That's the right. I think the community looking at a sector and industry that is ripe for investing and kind of talking about it for a month is a very good signal that our community is really sharing in good knowledge, wisdom, experience. A month ago, we were saying, hey, oil prices are not going to stick around the low 60s. Now they're mid 70s, right? That's a big jump in revenue, profit, cash flow for oil companies. So oil companies should start working. How early or late are we in that cycle? You never know, right? For all we know, all the tension geopolitically could go away magically and oil prices kind of settle down, or they may rise because the tension seems to be getting hotter. That's sad to see, but that's just a reality. So it's good that we talked oil a month ago when I thought, oil prices were too low. They were probably going to rise. We talked about, hey, that looks pretty good to invest while the investing was good. And it still may be a good time to invest. We'll take a look at PBR, and I'll give you an opinion on PBR, like what I think the stock is worth, and share that with you, as well as comments on oil. Before I get there, looks like Zim is a hot topic. Let's talk about Zim. I love Zim. Good company. We could talk about Zim and see. And you know what? You wanted me to look at ECO Petrol, which I've never looked at. So let's look at Eco Petrol, which I believe was the oil company in Colombia. All right, so let me go over a few things and we'll jump into these stocks. So we see the market is opened higher. NASDAQ is up 1%. The Russell tends to kind of get out of the block slow. So the fact that it's showing that it's in the negative is not overly concerning to me. I'm willing to bet $1 that in an hour it's going to be in green, but we'll see. S&P 0.75, Dow is up 0.61. The VIX is down. People are chilling. They saw that employment data and they said, you know what, man, everybody's getting a job that wants a job. The payrolls went up. Woohoo. And it really exceeded the expectation. It was a very favorable report. The previous was 159. We're up to 254. Consensus was 140. So people were like, man, very impressive. Unemployment rate dropped to 4.1. Let me toast to that. It's always good when people have a job, they're productive, they're making money, they buy the stuff they want. We're heading towards the holidays. People employed, they're going to spend more on the holiday that they celebrate. We got Christmas coming in the States. I know in Canada, they also enjoy a equivalent to Thanksgiving. We got Halloween coming up. Halloween's a big spending holiday in the US now. And I've been down to Mexico. They kind of think it's kind of cool too. So they've been celebrating Halloween. So you have these kind of discretionary spending events coming up. So I wanted to look at consumer discretionary as a sector to kind of look at and see how the stocks are behaving in that space. That'll be one of the sectors I'm going to look at. And it's because of this unemployment report, which looked really, really good. So, all right, good job, economy. Now, the one thing it does raise the question of, if the economy is doing this well, is the Fed going to keep lowering interest rates at a really fast rate, right? And my guess is they don't need to, but the Fed's the Feds. They're going to do what they think ought to be done. Are interest rates excessive? I don't think so, but the Fed's the Fed. They're going to make that decision. I think the Federal Reserve's in a pretty good spot. They've got room to go up or down. The economy's doing well. I think they could just stay out of the way for a little while. If you asked me 6 months ago, are we going to have a recession in 2025? I would have said I'm 75% sure we're going to have a recession. Just a couple of things are kind of lining up where we are going to have a recession. Sitting here today, October 4th, I don't know that we're going to have a recession next year. I'm more 25%. I would guess that we have a recession. If it happens, it's not going to be a really bad recession. It's going to be a slowdown, but it's not going to be really, really bad. That's my best estimate, looking at how favorable the report was. Now, a favorable report, what does it do to bond yields? Because I like investing when investing is good, kind of like the example about the oil companies, right? The oil companies looked really good a month ago because the stock prices had dropped because oil prices were dropping. But oil tends to rise, especially as soon as there's a conflict. So that was an example of buying when the buying was good. Now, as bond yields rise, which is the case, bond yields are rising today. And that rise in bond yields, as I put like the data together, good employment data, it sets the expectation that the Federal Reserve will not have to decrease interest rates as much or as fast as maybe they originally thought, which means they keep interest rates higher for longer, which means bonds will yield a higher rate for longer, which means today bond yields rose. The price of a bond drops. So when bond prices drop, I buy. I'm buying into a long-term ETF for corporate bonds. And I keep stacking money over there. It's money that I don't need. I have plenty of cash ready for equities, but I want to buy when the buying is good. I'd hate to wake up in a year or 2 years, interest rates are two full points of interest down. And I didn't buy bonds when the buying was good. So I'm buying them now so I can lock in a nice 5-6% return and kind of set it and forget it. I could always sell that ETF if needed, if I needed the capital, but I think it's a wise move for me. And these are the interest rates on treasuries. Treasuries are the least risky investment you can make in bonds. They're very safe. And as you go into corporate bonds, they pay higher amounts because it's a higher rate of risk. But the risk between a bond and a stock is very different. Bonds are far more secure, and there's more capital invested in bonds than there is in stocks overall. But they tend to be boring, so we don't talk a whole lot about them. Now, we talked enough about bonds. Let's talk about stocks. Let's see who's on the board of being top winners and losers. Spirit Airlines is down. Holy smokes, 35%. I don't like airlines, but those poor guys are down. Zim made the wrong board, man. Oh, Zim. Owie. That one hurts. That's a lot. 13%. Why? I guess shipping rates are going to drop because of the resolution to the union strike, I guess. We can take a look at that one. I've got that one on my list. After we go through these oil companies, we'll take a look at Zim. Now, some winners. These tend to be small companies that I've never heard of. Indonesia Energy showing up again. I think they were on the board yesterday. Incredible. Does Indonesia have a lot of oil? I didn't know that. I know Indonesia is really interesting, but I don't know much about Indonesia. If anybody knows if they have a lot of oil, I'd be really curious about that. All right, let's take a look at, so we went through that. As we look at, well, first, I wanted to see what sectors are moving. Let's see. Let's see the scoreboard for sectors. Consumer discretionary. See, I wanted to look at this because I kind of expected if everybody has a job, people are going to be going and buying stuff. And you know what? I am going to get a new pair of sneakers from Nike. You know what? I am going to go buy some electronics. I'm going to take my wife out to a really nice dinner. I'm going to do all kinds of stuff. And then financials are doing well. Well, if everybody has a job, they're going to need financial services. All right. Technology is doing well. Communication services, materials, industrials. Energy is there, but not leading the board. So most sectors are doing well. Utilities are down, real estate's down, and consumer staples are down. I'm surprised consumer staples is only down 0.03%. I would have expected, if everything's good with the economy, why buy consumer staples? I don't buy a lot of consumer staples. I just own Kroger there. All right. So that's the leaderboard. Let's take a look at consumer discretionary. Who's in this sector? What are these stocks all about? Well, you may have heard of this little company by the name of Amazon. Hoo-hoo. Go Amazon. Up 3%. I've been building a position into Amazon as fast as I can, as fast as humanly possible, or at least this human. And how much do I got so far? Amazon. So I've got $32,000 of their stock. And, I constantly learn, and I encourage you to keep learning. You can make a lot of money on the stock market, but more importantly, you can build wealth and you can keep expanding your wealth. And that's something that I've been working on for, 30 plus years, is just learning a little more, expanding my wealth and my portfolios and stuff. One of the lessons of 2023 is I sold Amazon and I regretted it. It's a great company. Why the hell did I sell it? So when it dropped down in price, I started buying into it. I sold 2 puts that I'll buy Amazon at under $185 a share. So that's 200 shares that I would buy. Dropping money, any hint that it's gone down, is down, I buy Amazon. So I want to get that up to at least $100,000. and it'd be nice to get there in the next 4 or 5 months. So I'm buying into Amazon. Any pullback I buy, and I'm glad that I own it today. So good deal. I'm glad that Amazon is working today, and it did pull back recently. It looks like Tesla's in there doing well today. Home Depot's down. You know, I think people fixed up their homes. That makes sense. Baba, Alibaba. You keep going, Baba. I'm okay with you rising. Toyota, good company. McDonald's. Why is McDonald's consumer discretionary? They should be consumer staple, in my humble opinion, but McDonald's is up a little bit. Pinduoduo is down a bit. Lowe's is down. So both Home Depot and Lowe's are down. Bookings, travel, $139 billion stock. Now that's a favorite to some. I am more of an Airbnb kind of guy. I think, and I'm not going to dive deep into that. At some point I will when I cover Airbnb when they do their earnings. And I'll compare Booking and Airbnb and share with you why I like Airbnb more. TJ Maxx. Again, I think they're a staple, but I'm not going to argue with anybody. Nike coming back. All the doubters of Nike, we'll see where they're at in a year. And for all I know, I lose a lot of money. But I think it's going to be worth a lot more. I think once they get the CEO in place and then the business starts doing what it's doing what it can do, investors are going to flock into the stock. One thing that, as I read books super investors have written, I would say that one thing they consistently say is oftentimes investors believe that a particular CEO can really drive value in a company, and they don't believe that. They actually think the fundamental business, the business is the value. CEOs are just driving that business, but they're not. Having a good CEO is good, but the business itself is what is the value. Google Alphabet's an example. That's a phenomenal business. The founders handed it off to Eric Schmidt, who ran the company very well. The company just grew incredibly. You can go from case study to case study and see that it's that business that's valuable. Microsoft, second most valuable company on the planet. The founder, Bill Gates, he's moved on to do other things. Apple, number one most valuable company. The founders no longer operate the business. They had a rock star CEO, but they handed it off to a guy who's administering the business, and Apple continues to be really valuable. Coming back to Nike, I think the underlying business is very valuable, and that's why I've invested in Nike. So that's interesting. Starbucks, I got out of Starbucks recently. I shared those comments with you guys. Mercado Libre, doing well. And then Ferrari, a very well-known name. It's incredible how much Ferrari is worth. So consumer discretionary is working today. Good to see. Good to see. Good to see Baba's up. Very good. Baba's been having a very, very good 2 weeks. So let's take a look at Nike. I've kind of talked about it a little bit, but as I look at Nike, it's just going to be a stock that is going to come back to where it was before. You know, it's going to rise to $140 a share. And what's interesting about stocks is when they drop, you know, the mathematics work in your favor if you're buying at these lows. And when I see Nike being sold off this way, it's like, hey, the Nike business is not broken. It's not like they're making terrible shoes. No, they have great products. Consumers like their products. Their brand is really well recognized. They're the most recognized athletic shoe brand on the planet. Probably one of the most recognized brands in fashion. So it's very accessible, whether you're a person that makes a little money, medium money, or you're really wealthy. People like Nikes. I see really wealthy people with a pair of Nikes on. I see, you know, the middle class, you know, society, Nikes. I see, you know, low income neighborhoods, Nike. It's everywhere. So it's a very good company. And I'm glad I own the stock. I bought more shares when they announced their earnings and they had a pretty good pull down. Bought shares 2 consecutive days, and I'm glad I did so. I think the stock, once they get things situated, I think they probably put a low kind of quarter on the books so they could set up the new CEO to have a pretty clear path to getting the company moving in the right direction. All right, so I talked about consumer discretionary, and we'll see how that continues to operate. Now we're going to talk about oil companies real quick. And of course, the oil complex is moving today mostly into the green. Now, it's not, what's been interesting is oil prices have really gone up fast, but stock prices for the companies haven't moved in proportion. The first one we're going to look at is PBR, Petróleo Brasileiro SA. And that's in Portuguese. I speak Spanish, but when I listen to folks speak in Portuguese, it sounds super cool, but I can't make out what they're saying. It's kind of close. Some words are close to Spanish, but they're not. And I think Portuguese speaking people would tell you the same. So this is in Portuguese. This company is operating down in Brazil. The company stock over the last 5 years is up 7.45. So not a incredibly appreciating stock. It does pay a massive dividend. So if you're earning this dividend over 5 years, let's just leave it at 10, okay, 10%. So 10% compounded over 5 years, you're going to have a pretty good return, collectively about 60%. So it's not bad if they're paying that dividend consistently, which I believe they have been. Now, this company here is a $93 billion market cap company. Revenue is about 1 to 1. And look at this PE, 6.6. Forward PE is less than 5. Strong buy, discounted by 20%. And I would agree with that. PBR, the one thing I'm going to make sure I understand is the balance sheet, because I think their income statement and balance sheet are probably going to look good, because oil companies tend to look really good. They are cyclical in the fact that as oil prices rise and oil prices fall, so does their revenue. So you see their revenue rise when oil prices are high and fall when oil prices drop. So we've certainly been seeing that. Now, the current rise in oil prices is going to help this company. It's going to help it. So we're kind of expecting that I guess it would be the end of Q3 would look good, but especially Q4, which is now dealing with an oil price in the mid 70s, potentially going into the 80s. Q4 of 2024 is going to look really good for PBR as well as other oil companies. All right, so that's the income statement. Now let's take a look at the balance sheet, because if they have too much debt, that might scare me away. I don't like debt, but they have cash. This is in the BLR. Just really quick, I'm not sure what the BLR to USD is. So it's 0.18. So 0.18 is the conversion. And I'm going to make the math a little easier and just go like 20%, just to get in the ballpark. I first like to look at a company high level, see if it's going to be worth spending a lot of time on it and really getting into the nooks and crannies of their financials and analyzing it. So if we go at 20% of this guy, we're at about 13 billion in cash in short-term investments. On their debt, total debt is 331. Again, 20%. They're probably at around 60 billion in debt. So net debt, they're like 48 billion or so. What is your EBITDA? Can they pay that debt off in less than 3 years? Or are they just too much debt? So EBITDA is 40 billion. And is this in dollars? So this is PBR. I want to make sure I'm looking at either USD or their currency. So this is listed as US dollar. Okay. All right. So they have a lot of EBITDA, 40 billion of US dollars. So they could pay off that debt in about a year and a half or less. Very good balance sheet. So balance sheet is not scaring me away from this company. The balance sheet's in good shape. So their cash flow is probably going to be very fantastic. And it's probably going to get better with higher oil prices. So you see that they've been a cash flow generating company. These oil companies just do it, right? They have natural competitive barriers because they own or they have the rights to extract oil out of regions of the world. In this case here, they probably have regions within Brazil that they have exclusive rights to extract the oil and then put them to market. That naturally is a competitive barrier. So it makes them desirable. It allows them to extract that oil and then put it to market. The only thing that affects them is oil prices. When oil prices drop, so does the value of these stocks. So 145, taking that 20% ratio, we're dealing with about let's call it a $28 billion free cash flow company. If we look at the trailing 12 months, so 28 billion, I'm going to look at multiplying that times 10 because it's an energy company and it's also international, right? It's outside my home country. So it's a really valuable company. I mean, you can go up as like 200 billion could be potentially their value, but you are taking on higher risk because you have a country. Brazil's a good country, but they're more volatile than the volatility that we see here in the United States. And it's my home country, so I got to say, okay, I'm going to put a higher rate of return on a valuation like this. So let's jump in and do a full evaluation on this guy. It looks interesting. So what I'm going to do is, looks like I'm in the right zone here. I'm gonna use Chevron as the starting point, and then take a look at this stock. So, all right, so let's look at PBR, and then we're gonna look at ECO or Eco Petrol, which I believe is that company in Colombia. Man, we're all over South America this morning, which is great. All right, so let's change our symbol here to PBR. And I'm going to put this sheet on another monitor here so I could start just filling things out in my valuation model. So here's a very important step, right? So we did this valuation. Chevron, I'm very familiar with them. I used to work for an oil company that got acquired by Chevron. So I feel like I worked for Chevron because a good part of their operation is now the company I used to work for. So I know this company really well. A discount rate of 8 is very appropriate because they have a solid balance sheet. But now that I'm leaving my home country, I'm going to demand, well, demand's a strong word. I'm going to improve that to 11%. I'm going to say, I want a higher rate of return. It's my decision. It's my capital. So 11% is going to be the rate of return. Growth rate, I'm going to leave it like the same as Chevron, 6% growth rate. We know it's probably going to be better than that. Probably the next 4 years. I'll leave it at 6% just to be conservative. All right. So what was our free cash flow? What was our free cash flow? I'm going to look at my other screen here, get that free cash flow, and I will convert it on the spreadsheet. My first kind of, rough cut, measure that I get in the ballpark is to determine, hey, do I want to come back in here and put in a little more time and energy and evaluate this company further? And the answer is yes. So I'm going to now convert their free cash flow number from their Brazilian currency to US dollars. It's 26 billion. Boom. Man, that's a good looking number. 26 billion of free cash to pay dividends, 10%, 12%. We can afford big dividends. And looking at that growth rate, you see the value of that cash is really high. And that's when you discount it at 11% rate of return. Wow, man, looks pretty good. And we got cash and cash equivalents. Okay, so let's take a look at that number. The stock analysis makes it easy for me. And their amount in Brazilian currency is 207 billion in Brazilian currency, but I'm going to convert that to US dollars. Of course, I know, Tomas, you're in Argentina, so you can convert it to your currency. It's just a formula. I'm using 0.18 to convert it to US dollars, but you would do something similar, but convert it to your Argentine currency. Free cash flow. Wait, what am I thinking here? I want cash. I think I looked at the wrong number, and I apologize for that. All right. I think I'm talking too much and typing while I talk. So 67,677 times 0.18. So it's 12 billion. Still pretty good cash level, man. Looks pretty good to me. Looks pretty good. So total debt is 120. So 120, 652 times 0.18. So we got 21 billion in debt, not too much. And their EBITDA was like 40 billion. So man, looks good. So this is just a really attractive situation to an investor that's comfortable investing in Brazil. And their market cap is 93 billion. The stock's actually trading down by 0.46%. Wonder why. And then shares outstanding are 12,890,000,000 shares. Their current stock price is actually $15.08. So you can see their cash flows are just really, really high. That's why they're paying that big, dividend. They're like, hey, man, we don't know what to do with all this cash. We got to send it over to investors, put it in their pockets. 7 analysts are covering the stock. Okay. Let me show you this really quick, and then I'll update the valuation model. So 7 analysts are looking at this stock, which is a pretty good number of analysts. And they say it's discounted based on the earnings per share. That's what they use. So when we look at earnings per share, the best estimates that those analysts have is that it's going to rise quite nicely. And I'm going to take the lowest number, which is $7.96 per share. And they're using PEs that are just around under 10. Okay. And I'm going to use a PE of 9. And that way it'll tone down that big number of that was valued based on free cash flows. All right. So this one, and that is in US dollars. No, that's in Brazilian currencies. Is that correct? Yeah. So that's in Brazilian currencies. So I'll go equals 7.96 Brazilian currency times 0.18. And I'm going to go 9. Growth rate is supposed to grow quite nicely. So I'm going to go with 8. So you can see that earnings per share wise, I'm being a little more conservative. And I think that stock is priced a little expensive based on their earnings per share. But I take 2/3 of the weight of the free cash flow method and 1/3 from the earnings per share method. And I get to a 52% discount on PBR. It's looking pretty good to me and really worthy of, following this stock. Maybe what I have realized is that I have too much Chevron, and I like the company, and but maybe I can sell some of my Chevron and buy like Energy Transfer we looked at yesterday, PBR, and I'm going to continue to think about that. I'm not ready to do that yet, but there's an evaluation of PBR. If it's something that, you really want that dividend, if you want that dividend, man, it's looking pretty darn good. If now the last thing I'll comment is, see, this dividend here is really nice. I don't know what the rules are tax wise for me in the US. I think I'm going to have to pay some taxes. And if I am I going to have to pay the Brazilian government some taxes? And are they going to give me a haircut? I know with Zim, I would have to pay the Israeli government. That would be a question that I would put in the homework item if you're really interested in PBR is how much of this dividend are you going to have to pay in taxes to the Brazilian government? And then how does that affect your taxes here in the US? If you're in the US or if you're somewhere else, right? I don't know what the tax rules are in Argentina or other places, but this is really interesting. It's really interesting. Over the last month, I mean, the stock's not like skyrocketing, it's just up in the last couple of trading sessions, but I don't think it's getting away from us. And just the fundamentals look pretty darn good, man. If we look at this stock historically, PBR, I want to look at the 5-year chart and see where the stock's been. Yeah, it's interesting that it's kind of gone up over time, right? If you bought during COVID, which was hard because people were thinking, what the heck's going to happen in the world? You'd be up quite well, but maybe you just decided to start buying it in these low points in 2021. You're doing very well, man. If you, let's say you drop some money into the stock, that would have been a super good move. Yeah. You're getting paid a big dividend. You're up on the stock, man. That looks pretty darn good to me. And if, as recent as, a year and a half ago, you could have bought the stock and be up 55% and be paid that big dividend. So there's always opportunity. You just got to be willing to go find it. And sometimes opportunity is disguised as something else. So thanks for bringing up PBR. Looks interesting. And we'll see where oil prices go. If they keep climbing, oil prices or oil stock prices will continue to climb as well. And if oil prices are higher, that means PBR is going to make more money and higher free cash flows. So thank you very much for asking about PBR. Let's try to find ECO Petrol. ECO Petrol, here it is. So it's EC. What are these guys all about? 5-year chart. Now it looks different than PBR, right? It's not like a case where if you bought them at the very low point of COVID, you'd be up a lot. Nope, you'd just be up 26%. But over the last year, this stock's really hasn't done much. It's down a little bit. Oh, no, it's down 16%. What am I talking about? So it's down quite a bit. Let me take a look at it in stock analysis. Move out of the way, Nike. We're getting into the oil complex. All right, so it's up 1.22% today. Year to date, it's down 24%. Wow, look at this dividend. Holy smokes. Am I reading this right? 35%. Am I reading 35%? What is going on here? So Ecopetrol operates as an integrated energy company. The company operates through 4 segments: exploration, production, transportation, logistics, refining, petrochemical, biofuels, electric power transmission, toll roads, concessions. Okay. And I think, so CO, I'm going to click this link just to make sure I understand them. I think Shadow Guy was saying this is the company in Colombia. Is that correct? And I don't need it converted. I speak Spanish, so I'm good. CO Petrol, okay. All right, so they're down. Trying to see a map to where I would have thought they would have showed us a map, but they didn't, of where their reserves are. And it looks like it's down in Colombia. So the reserves are probably there domestically. And they're trying to put the spin of eco into their company, trying to do maybe some renewables and so forth. All right, so that's who these guys are. It's pretty incredible that they're paying such a high dividend. That's $3.20 in US dollars. Okay. Um, let's take a look. Why? I mean, it kind of begins with a question of why would you be paying a 35% dividend? That's super high. And it actually creates concern for me. It's like usually broken companies get listed with a 35% discount. So just a red flag that could go away if we kind of make this do our homework. So COP to US dollar is all right. So 0.00024. Okay, so that's the Colombian peso. Oh man, these numbers get a little wild. So it followed pretty much the same pattern we saw with PBR. And if you look at Chevron or Exxon, they're following a similar pattern. It's oil prices that are driving this up and down. And this one here, let's go ahead and I'm going to need to use my model. I'm going to give you a quick tour and then I'm going to use my model because this conversion rate, I can't do it in my head. I can't go 4 or 5 decimal places past and then do that in my head. All right, so cash flow is there. All right, let me go ahead and kind of quickly get into my model. I'm going to move this to a different screen and let's kind of look at this through the model here. All right, so PBR looked good. Okay, now we're looking at EC, and this is Eco Petrol. So Colombia, I'm going to keep the discount rate at 11%. I'm not quite sure if Brazil and Colombia have the same kind of risk level, but I've heard a lot of positive things about Colombia. I think their economy is doing well. They have a lot of natural resources and they do a lot of agriculture. Obviously, like coffee, a lot of coffee growing. So I'm going to leave it at 11. I think I'm fine with 11 there. Now let's take a look at the other numbers, and I'm going to start looking at the numbers off their financials and then putting them into this model. All right, so when I look at cash flow, the numbers are pretty big, so that's why I'm going to just give you the net. So this is, so they're in millions of COP. Let me try to get this right. So in millions, okay. So if this is in millions, it's going to be okay. Okay, so let Google Sheets do the math. It's about a $4 billion free cash flow number. We'll keep the growth rates the same. This is energy, so we're not expecting super high growth, but we'll just leave that there. Discount rate 11%. So it discounts the company down, or the cash flows that we expect from this company down to 53 billion. Now let's take a look at the cash level. What is the cash on their balance sheet? So the cash is about 3.6 billion. And what is the debt? Total debt is So 115,019, 566. So their debt's about 27 billion, and EBITDA is represented in US dollars on stock analysis, and EBITDA is 13.2. So they can pay their debt off in about 2 years, a little over 2 years. So that's good balance sheet. We're looking good there. So after we start with intrinsic value, we look at the add cash, take away debt, we get to an equity value of 29 billion. Now the market cap on EC is 18.66 billion. So it provides a pretty good discount. The shares outstanding are 41,120. So did I do that right? I don't think I did that right. So it's shares outstanding. Well, I'm going to do it differently because I think the data it's giving me is a little funky. So I'm going to take the current stock price and divide it into the market cap that they're listing. 1860 divided by. So that's the shares outstanding. So the value per share is $14.50. So these companies cash flow, and no doubt about it, 60% discount there. Now, when we look at the forecast, 2 analysts cover the company. They think it's fairly priced. And we are looking at the earnings per share is supposed to be 357.79 times 0.0024. And it's going to be like 8 cents per. It rounds up to 9 cents per share. So now it's not supposed to grow. So I'm going to go to 0. So what did I do wrong there? This is earnings per share. I think one of my decimal points is off. Okay, so I'm not quite sure where my math is wrong. So this is earnings per share is 357. So I have that correct. So I'm going to have to reverse engineer that number as well. So if the forward earnings, the current earnings, okay, so I'm going to take their current stock price. No, I can't get there that way. Okay, so I'm not sure how to get to that number. Let me just go ahead and looking at the free cash flow number, and I'll have to do some homework to study the data and convert it correctly because I'm pretty sure this is incorrect. So I'm going to ignore this for the time being and just depend on free cash flow method. They can afford, looking at their free cash flow statement, can they afford that massive dividend? I don't think it's a good idea to carry a dividend like that. Let me look at their dividend history. It immediately has an investor like me thinking, oh my God, can they afford that dividend? but they've been paying it. Is it a matter of they're paying it in a currency that is getting devalued very quickly, and that's what we're dealing with? Maybe. Because I know in countries where their currency gets devalued quickly, they pay very high interest rates because they have to compensate people that have deposited money in their bank a high rate of return because their money's being devalued. That might be going on, but I think I'm going to have to go deeper and really understand this better. I think the cash flows look really good. I just need to do more homework on their free cash flow, their earnings per share, understand that, and understand this dividend. I have to get my head around it and understand what the heck. I would say that this immediately to a US based investor, it really creates immediate concern that, hey, why are they paying such a high dividend yield? So interesting company, this company here. And I'll take a closer look at it and let you know, Shadow Guy, what I think. So thanks for asking. All right, so we're getting all over oil, Let me check some comments. Let me check the market. What is going on, stock market? What? It was looking a lot better earlier. Remember how I said the Russell tends to get out of the blocks a little slow and then it comes back. But small caps are looking pretty good right now. The NASDAQ isn't doing as great as it was earlier. Let's take a look at these sectors. Who's on top? Who is number one? So number one, consumer discretionary, financials, energy, materials, industrials, technology. Everything's still in the green pretty much, except for utilities and real estate. So still looking good. We're still on our way to have a good, positive day. Not as great, but we'll take it. Yeah, the payout ratio on EC looks really good. It's just what I would hate to do is I buy into a stock looking at its dividend, and then I lose like 40%. So I net out less than that, and then I probably have to pay taxes to the Colombian government. So it has to make sense. My preferred investment is buy something that's going to double in value over the next 5 years. That's the road that I want to travel. And this one here looks interesting, but I think there's a lot of questions that have to be answered in my mind for me to put my capital to work here. PBR was a little more mainstream, a little more understandable. That one's kind of looking really good. And it is an international company, but it's okay to be diversified around the planet, right? Not overly diversified, but I'm in the US and most of my stocks and bonds are in the US, but hey, I've got some investments down in Mexico, a couple. Got obviously some in China now. In South America, what do I have down? I don't think I have anything. So that'd be pretty good. I've got stuff, got one in Europe. I don't have anything in Africa yet. Looking into India, but I'm not diving in head first. It's got to make sense to me. I got to make sense of it. And as you could tell, EC was kind of a little bit difficult. And it looks like we're getting some comments in here that might be interesting to read. So Alexander. So this is not a good option because the current government's policies do not seek the company's growth. Okay, thanks for sharing that. Dodgers or Padres? I'm an Angels fan, so throw a curveball back at you. CIA playground, too much peril. In Colombia, potentially. All right. So Shadow Guy. I think the dividend is so high because the stock has been beaten down recently. Could be. It's just a beaten down stock. Like PBR is paying 12%. Okay. Now you can look at it and say, well, a beaten down stock that was paying a 5-6% rate of a dividend rate, which is a company outside the US That makes sense because they have to attract investors into their stock if they're going to be listed on the New York Stock Exchange. But 35%, it's like, whoa, that is really, really high. And it's down 46% over 5 years, but over the 1 year, it's down 20%. A 20% reduction in its stock price should not cause that high of a dividend rate. So I would take a look at that and see what is something's not making sense there. I'm not able to assemble all the Lego pieces and make a very good decision there. So, but it's a very interesting company, boy. From an interesting perspective, that one is super interesting. I'm going to take a look at it. All right, so we'll take a quick drive by the stocks market really quick. So we talked about the jobs report. Rivian, we talked about Rivian this week, and it looks like their shares are falling because their production forecast is not looking good. 10-year treasury yield soars. So this is where I'm buying my ETF in long-term bonds because my bonds for the next 5 years, I'm good. I don't want any more bonds in the next 5 years. I've got a nice bond ladder, but this is exactly where I'm buying it. So I'm probably going to buy into that ETF further today. So that looks good. All right. So looks like I'm caught up on the comments. Everybody, thanks for tuning in. Let me just remind you, if you want to be a paid member, I would really appreciate that. There's really good perks and things that you'll get access to, like tools. We're going to have our first member-only investor call this Sunday. You'd be invited to that if you're a member. And if you sign up before, or I guess by October 6th, you'll be upgraded to the next level higher in the benefit. Let me try to find where is that? I can't find it. So, but look for the details on the channel. Well, I can't find the details of the member programs, but if you look at the details of the description of this live stream, you'll be able to see the different levels of membership. And I really appreciate all the current members that are on. Really appreciate it. And really appreciate your support there. And hopefully I exceed the value of your payment with value from the tools I'm providing, as well as the calls and content. So everybody, enjoy your Friday. I hope everybody has a nice weekend. Let me play some music on the way out and wish you guys a very nice weekend. Let's hope that this stock market continues to rally and reward us at the end of the week. Prior to today, the stock market has been selling off. So not too bad. It's kind of been a wonky week. 4 days of October, if I include today, have not clearly told us what the heck's going to happen. And if you look at the stock market now, the NASDAQ barely keeping its gains. The S&P is close to zero. Dow's close to zero. So it's been a weird week. But it was a great September. And year to date, I'm up big. So it could be weird, but the dollars look good. So I'll keep investing, trying to find where's the next place where I could put some capital to work and make money in 2025, 2026. Hopefully you found the content interesting. And I really appreciate everybody tuning in. And Alta, have a nice weekend. Omar, have a nice weekend. And shorting Rivian, I don't know. I'd hate to do that because that's an unpredictable small cap. It could double in value like that. And next thing you know, you're looking at your short position going, why the heck did I short Rivian? It's not my play, but more power to you if you want to go there. Shadow Guy, thanks for tuning in. Brad, have a nice weekend. Tomas, thank you, sir, for joining. Have a nice weekend. Thanks for the questions. Fallsgrave, thank you for joining, sir. Have a nice weekend. And I know Trader Prad's probably trading his heart out, using this volatility in his favor. Have a nice weekend. All right, everybody. I am out. Take care.